Hello friends, in the series on the income tax cases, today we will discuss a very important case on section 271D penalty and disallowance under section 40A3. The name of the case is RAGHUVEER Singh versus Principal Commissioner of Income Tax, and this case has been reported in 101 ITAT Tribunal at page number 306. The matter has been decided by Jaipur ITAT and the date of the judgment is 18th August 2022. The facts of the case are very interesting. In this particular case, the assessee was a real estate businessman. He was filing his return of income under section 44 AD, in which the presumptive income is taken. During the year, the assessee purchased a land of rupees near about 63 lakh. During the assessment proceedings, the assessee was asked to explain the source of this cash. The assessee gave the proper explanation. The assessee said that the cash balance of the assessee was near about 17 lakh in the opening of the year, and during the year the assessee has also received the cash loans from the very close relatives, like 4.5 lakh from his younger brother and 5 lakh from his wife. He has also substantiated the ledger accounts of all the parties from whom the cash loan has been taken. The learned assessing officer was convinced with the facts, documentation of the assessee and passed the assessment order in favor of the assessee, meaning thereby there was no addition. The assessing officer also didn't refer to the Joint Commissioner of Income Tax for the initiation of the penalty under section 271D, which is therefore accepting the cash loans. So he was much convinced with the transactions. But after that, when Principal Commissioner of Income Tax see these transactions, he initiated the proceedings under section 263. And when the show cause notice was issued to the assessee, even in that show cause notice, it was not explained to the assessee that clauses A and B of explanation to the section 263 has been attracted in the case of the assessee. The assessee moved to the ITAT, engaged the proceedings under section 263 to the ITAT, and the ITAT said that the provisions of section 263 is not applicable in the present case because the order is not erroneous, because the assessee has done all the relevant proper inquiry while passing the assessment order. Apart from that, the ITAT also referred to a very important circular of the Central Board of Direct Taxes of 1985, the circular number 387, which says that the penalty under section 271D or any other penalty cannot be initiated, or the assessee cannot be penalized for the genuine transactions undertaken by him. This is the crux of that circular, that you cannot penalize the assessee for the genuine transactions. So in the present case, since the identity of the seller was there into the sale deed, it was much there, the address was there, there was no doubt on the part of the assessing officer that the transaction is not genuine. So initiation of penalty under section 271D is not correct in this particular case. Apart from that, the ITAT also said that the section 273B, which says about the reasonable cause for entering into some transactions, is proved, then section 273B is more heavier than section 271D. So in this present case, the assessee has received the cash loans from the close relatives and there was opening cash balance. So in this particular case, the revision done by the Principal Commissioner of Income Tax was not justified. But the main point of this case is that when the cash transactions are there from the close relatives and when the identity of the seller is proved beyond limits and there is the no doubt about the genuineness of the transaction, then initiation of penalty under section 271D or the disallowance under section 40A3 is not justified. At the end of this video, once again I am repeating the name of the case. The name of the case is RAGHUVEER Singh versus Principal Commissioner of Income Tax, and this case has been reported in 101 ITR at page number 306. The matter has been decided by Jaipur ITAT and the date of the judgment is 18th August 2022. Thank you, friends.